I'm Jessica Minton for IB Times TV, reporting from the floor of the New York Stock Exchange, where stocks edged up today after positive consumer sentiment data. But the big news is the G20 summit that's taking place over the next 2 days, where leaders are going to have to grapple with that currency manipulation issue. Jonathan Corpina from Meridian Equity Partners will weigh in about the latest positive economic data coming out of the U.S. and whether a currency war is possible and if it could also lead to a trading war. Consumer sentiment in the U.S. jumped in February, rebounding after a disappointing showing the previous 2 months. The University of Michigan Preliminary Index of Consumer Sentiment climbed to 76.3 this month from 73.8 in January, beating analysts' expectations of a projected rise to 74.8, according to the median forecast in a Bloomberg survey. Consumer sentiment rose to a 3-month high. As we continue to see improvement in attitudes, will this also be reflected in consumer spending?
I think so. I think if you look back as to what happened back in 2008, 2009, I think the entire American population, investing and spending population, learned a very valuable lesson. And that lesson was to make sure you know where you're spending your money, how you're spending your money, and how you're saving your money. So over this time, I think we've learned a very unique and interesting approach now to how to invest, how to spend your money, and how to save your money, especially when we're talking about credit cards and mortgages and stuff that relates to long-term debt that people are taking on. So I think the sentiment is there that our economy is getting better and people are understanding more and more what they're investing in and how they're making money and where they're spending money. And I think that's going to translate into consumers having more money to be able to spend more money. We've gotten reports out of the credit card companies of activity that has increased there. Retail sales have showed us, even though some have been seasonal numbers, that retail spending is getting better. The housing numbers are getting better. I don't think this is attributed to people saying, okay, well, the economic crisis is behind us and now we can go back to our old ways. I think we got through this, we've learned what the mistakes were. Individually, we've learned how we're going to be able to deal with this moving forward and how to manage our own little businesses of our own money independently. So I think we are going to see that translate into consumer spending, whether it's in retail, housing, automotive. I think we're going to continue to see this trend there.
G20 officials struggled to find a common form of words on currency manipulation ahead of a summit on Friday where divisions within the group over growth versus austerity looked set to flare back to life. A draft prepared for the group of 20 finance leaders will omit part of this week's group of 7 statement, declaring fiscal and monetary policy must only be used for domestic economic aims. Central banks in Japan and the United States have policies of buying government bonds to boost credit to the economy, and Japan's government also wants to additionally stimulate the economy fiscally. Such policies have led to a weakening of the dollar and the yen, making exports of these countries more competitive, in what some policymakers refer to as currency wars. And the G20 summit is taking place over the next 2 days, and we're watching leaders try to grapple with the issue of currency manipulation. Now, in the 20s and the 30s, there was instances where a country would devalue their currency and then their neighbor would try to do the same thing, and then there was a trading war going on. Are we in danger of seeing that happen again?
I don't know if we're in particularly danger of seeing that happen again, because what's happened in the 20s and 30s compared to now are 2 completely different eras. And I think the lines of communication between countries are open now. So when you had conflicts dealing with currencies back in the 20s and 30s, it was somewhat of a battle back and forth, and both parties really didn't understand or know what was going on. I think now when we talk about economies and efficiencies and what's going on, it's a global concept. And I think globally we've got investors that are trading and investing internationally. We've got companies that have multiple headquarters and they've branches internationally. We've got imports and exports going back and forth. So I think in time, the currency conflict will be there, but it's just going to be a little bit more transparent. And to go back what we were talking about before, I think our governments collectively in our world have learned very valuable lessons over the economic downturns that we've seen over the last 4 or 5 years. And I think they need to understand that working together is going to get us to where we want to be, as opposed to working against each other. Clearly, the European crisis, talking about the euro, the devaluation of the euro has been an issue. Concepts of breaking up the euro has been brought up before in the past. But I think now in time, as things have seemed to to solidify themselves here in the United States as far as our economy is concerned, that's going to translate into other currencies that are there.
Thank you for joining us, Jonathan.
Thank you.
The G20 summit is scheduled to take place in Moscow for the first time this weekend, and they are expected to discuss those loose monetary policies. I'm Jessica Minton for IB Times TV.